That story from Bloomberg's Kimberly Adams.
Charlie, Tesla handed over 484,507 vehicles in the last 3 months, beating analysts' average estimate for 483,173 deliveries. BYD sold 526,409 fully electric vehicles in the quarter to become the new #1 in EVs, driven mainly by its much broader lineup of cheaper models in China. Meanwhile, Rivian Automotive missed expectations for quarterly electric vehicle deliveries, weighing on the manufacturer's shares even as production ramped up during the past year. The company built 17,541 EVs in the final 3 months of 2023 and delivered 13,972. Charlie?
And that's Kimberly Adams reporting. She mentioned Rivian. That stock now getting hit hard, down 10.9%. Tesla shares down by 0.2%. Those are our top company stories at this hour, and this is Bloomberg.
You're listening to Bloomberg Sound On with Joe Matthew and Kaylee Lines on Bloomberg Radio.
We're almost wrapped up here in the second hour of the fastest show in politics, but first we have to reflect on what's happening at Harvard and the resignation of President Claudine Gay. So we'll have more on that in just a moment. First, though, let's get a check on world and national news. Dan Schwartzman has that in New York. Hey, Dan.
Thanks, Kaylee. As you've been hearing on Bloomberg Radio, 6 people have been reportedly killed in Beirut, Lebanon, in a suspected Israeli drone strike. The state-run Lebanese national news agency says an office belonging to Hamas was hit. The attack is the first on the Lebanese capital in nearly 2 decades. According to the terror organization, the deputy head of their Politburo, Saleh al-Aruri, was killed. Al-Aruri was also known as a mastermind behind the Palestinian terror group's armed wing in the West Bank. He's also the most senior Hamas member to be eliminated so far since the October 7th attack on Israel. Harvard University President Claudine Gay has announced she is resigning, ending the shortest presidential tenure in the university's history. Gay served just 6 months and 2 days and had come under increasing scrutiny after her disastrous December 5th congressional testimony on anti-Semitism on Harvard's campus, as well as multiple allegations of plagiarism in her academic work. Harvard says Provost and Chief Academic Officer Alan Garber will be named interim president. At least a dozen gas canisters were found in the car involved in that New Year's Eve crash outside a concert venue in Rochester, New York. 2 people were killed, 3 people taken to local area hospitals. The gas-laden Ford Expedition, driven by 35-year-old Syracuse native Michael Avery, collided with another SUV near a crosswalk before plowing into a group of pedestrians who were leaving the Kodak Center. Avery is still in the hospital with life-threatening injuries. Rochester Police Chief David Smith says a motive has yet to be established.
We've not been able to identify that there was anyone else involved in the crime or that it was part of a larger plot. Additionally, we have not uncovered any information leading us to believe that the actions of Michael Avery on New Year's Eve were motivated by any form of political or social biases.
That's Rochester Police Chief David Smith. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Dan Schwartzman, and this is Bloomberg. Kaylee, back to you.
Dan, thank you so much. As Dan just told us, Claudine Gay is now resigned as president of Harvard. She had come under increasing scrutiny after not just allegations of plagiarism, but after testimony she gave here in Washington on Capitol Hill back in December regarding anti-Semitism on Harvard's campus. I think we all remember the exchange between then President Gay and Republican Congresswoman Elise Stefanik. Here's a little snippet.
Do you believe that type of hateful speech is contrary to Harvard's code of conduct, or is it allowed at Harvard?
It is at odds with the values of Harvard.
Can you not say here that it is against the code of conduct at Harvard?
We embrace a commitment to free expression, even of views that are objectionable, offensive, hateful. It's when that speech crosses into conduct that violates our policies against bullying, harassment,
does that speech not cross that barrier?
So that was Congresswoman Elise Stefanik back in December. And of course, she had some words today about Claudine Gay's resignation. She tweeted, or posted on X rather, 2 down. Harvard knows that this long overdue forced resignation of the anti-Semitic plagiarist president is just the beginning of what will be the greatest scandal of any college or university in history. Of course, when she's saying 2 down, she's referencing the fact that Liz McGill, the former president of Penn, who also testified in that hearing, was asked the same questions by Congresswoman Stefanik, had resigned late last year. There's another member who, though, was in the room, and that would be the president of MIT, Sally Kornbluth, and Bill Ackman, who is one of the most vocal Wall Street investors out there in regard to Claudine Gay and the idea that she should resign, has tweeted or posted on X today, A2 Sally. Seems like a reference to MIT. So we're going to have more on this story coming up later this evening on Balance of Power. We'll also have the latest on the 2024 race because, yes, it is an election year. Frank Luntz is going to be joining us. So really looking forward to that conversation coming up at 5 p.m. Wall Street time. First, though, here on Bloomberg Radio, you can listen to Bloomberg Business Week. It starts right now.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
And a very good afternoon, everybody. Welcome to the first trading day of 2024. A few hours already, of course, in the session, live from the Bloomberg Interactive Broker Studio, streaming on YouTube and Bloomberg Originals. I'm Carol Masser, along with Tim Stenivek on this January 2nd, 2024.
First trading day of the year, Carol, and we're down on the S&P 500 by 0.9%. By the way, welcome back.
Thank you.
You were here all last week.
Yes.
I was not.
You were not. We haven't seen each other
I
in
was
like
here all week,
a
the week
month.
before, and the week before that, and the week before that.
I was supposed to be here,
You were
but I got
supposed to be here.
COVID.
You did. Is that okay to say?
Yes.
Okay.
That I got COVID?
Yeah, I didn't.
Yes.
I didn't want to say it without your permission.
It's a reminder, folks, it's still
HIPAA
out there.
violations.
No, it's okay.
But welcome back. It's good to be back here with you.
Thank you. It is so great to be back with you, my partner in crime here on Bloomberg Business Week, in a year where I feel like we're going to be talking about some of the similar themes, although I do feel like geopolitics is certainly front and center. We've got a great guest on that a little bit later on. But I will say what's interesting to see the NASDAQ down 2%, really taking it on the chin after a nearly 54% gain in 2023. No surprise, perhaps, Tim, that investors taking a little bit of a breather when it comes to some of those big tech names, especially when it comes to the Magnificent Seven.
Yeah, speaking of the Magnificent Seven, we got a couple of stories of those companies in the Magnificent Seven. Tesla front and center, slipping from its top spot as the #1 EV maker. Rivian tanking on a disappointment when it comes to deliveries. And then Apple, Carol. There's a new bear in town. It's taking a bite out of shares.
Yeah, I think its worst day in months. We're going to get into that. It's also not a great day either for the Dutch chip-making equipment company ASML. Politics at play. China's at play. The U.S. is at play. We're going to explain it all. We're also going to get into why you may want to say goodbye to the pandemic dividend. Love this Bloomberg Opinion column.
Also, almost everything Wall Street expects in 2024, and judging by what happened in 2023 and how off-base economists and strategists were, take this with a little bit of a grain of salt.
Yeah, exactly. We'll get into that. And, of course, on politics, we're going to talk about the upcoming November elections and so much more. Of course, geopolitics, Middle East concerns, Russia, Ukraine. That is still front and center as we get for what? Year 3. Get ready for year 3 of this war?
Yeah, starting in February. That's right. Hey, we end the show with one of our favorites, Hannah Elliott. We talked to her about what she was driving in
Matt
2023.
Miller, eat your heart out.
30 cars. She drove 30 cars last year.
Yeah, and every time she writes about it, it's just beautiful. It reads like wonderful, like fiction or a novel, but she's going to talk about the best wheels on the road that she drove in 2023. Right now, though, it's markets. Over to our TV colleagues. Countdown to the close starts right now.
Countdown to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is the countdown to the close. Romaine Bostick alongside Katie Greifeld. We're joined right now by our colleagues, Mike Regan and Paul Sweeney. Welcome to our audiences across all of our Bloomberg platforms, television, radio, Bloomberg Originals, and YouTube. Oh, what is this? A sighting of Carol Masser and Tim Stenivek.
Do you remember us?
No, it's been a while. I mean, I know you guys had to take off and deliver all those presidents around
New Year,
the
same
world,
us.
but welcome back.
New Year, same us.
We are back in a big way.
How are you feeling, Carol? It's great to see you.
I am feeling much better. I'm feeling much better. Did get another case of COVID, so now I'm either on my 3rd or 4th case. It's just a reminder.
Isn't it interesting that it happened right when she got back from vacation?
You know,
it's like the plane lands. She's supposed to come back to work the next day.
I would have gladly come in, guys, and given
I want to
you
see the
COVID.
receipts on this COVID. by the way. Did you save your little
I didn't save it. I did tweet it
strip?
out. I did tweet. Ask my family. It's not great to have a 20-year-old in the house who's home from college, who all they want to do is spend time with their friends, and they're like, "Mom, you've got COVID. You're not coming out of that room." It was kind of a little rough.
Well, Carol, but you had all this time off.
You know what I did?
You could have probably caught up on, reading, writing, arithmetic.
Ask me about a streaming series, folks. I have watched it.
A streaming series. What did you watch?
I watched. I finished up The Crown. I watched the Cary Grant series. I watched A Little Paris in Love. Can I do that? I watched a lot of stuff. I'm going to tell you. I watched the David Beckham series.
Yes.
Also, really
you and I
great.
spoke about this at length. Yeah.
We did. Having said that, in terms of streaming, this is something that's going on in our household. This story comes courtesy of the Wall Street Journal, and it turns out Americans are canceling more of their streaming services. It's about a quarter, apparently, have said goodbye to some of their prime streaming services, and that's about in the last 2 years or so. So people are looking at their pocketbooks, Tim, and saying, okay, what do I have money to spend on? What am I using? What am I not? And they're finding that they're cutting back on some of those streaming.
Well, think about it. All this stuff tends to add up, especially when prices go up. Katie, we're talking about companies like Apple TV Plus, Discovery Plus, Disney Plus, Hulu Max, HBO Max, formerly HBO Max, now Max, Netflix, Paramount Plus, Stars, Peacock. I went through this. I actually subscribed to all of these except for 2.
Wow.
It's not good.
Big
it's not
spender.
good. It's almost like there needs to be some sort of bundle where they're all bundled together and you pay a monthly fee to one company and you get all of this stuff. I'm trying to think if that's an option. Oh wait, that's what existed for, like 3 decades, and then the unbundling happened and now we're paying more?
Well, perhaps, time is a flat circle. Technology is cyclical, I think someone once said, so maybe we'll get back there. Do you guys want to talk about the IRS, though?
No, I want to talk about streaming.
No, I'd much rather talk about streaming.
The IRS?
The IRS.
Where is Katie going? No, so, I mean, does they have a streaming service?
No, but there was a
That
really
would
great
be a
story
great
about the
series.
call center at the IRS.
The call center, okay.
Yeah.
All right, tell us about the call center.
Let me tell you about it. I'm
That
going to
must be
try
a lovely
here.
place.
Okay, so if you take a look at the IRS's call service level, did you know it was 87% during the 2023 filing season?
I did not know that.
If you call the IRS, 87% of the time they would call you back, and that was a big win for them. Treasury Secretary Janet Yellen said that the IRS will once again break that 85% this filing season. But this story pointed out, and I thought it was kind of interesting, that if you take a look at the past few months, the IRS call service level, it slipped to about 73% in recent months. So I don't know, they have a lot
Why
of grounds.
Why is it going down?
Because they're streaming. They're not answering phones, they're streaming.
They're trying to keep up with all their different shows across all their different platforms.
No, I mean, look, some of it in truth is seasonal, that during tax season, they hire more workers to help answer people's questions. So I guess it makes sense that during tax season, Romaine, it's higher.
Yeah, I don't actually want the IRS calling me, so
Yeah, exactly.
I'm actually okay with this.
But if you called them, I think you would want them
I would never call the IRS, ever.
I guess it's
I don't want them to know I exist.
It's
too bad. No.
I'm sorry,
I hope they don't have a
Romaine
television.
isn't here right now.
No, nobody watches. No one.
All right, nobody wants a call from the IRS, and people are kind of paring back on streaming. All right, guys,
Can I actually write off as a tax deduction my cost of my streaming services?
You can
I mean, you
try.
talk about it at work, so
do talk
I'm not an
about it.
accountant. Check with your accountant.
But he plays one on radio and TV.
Every day.
All right, guys, we got lots to talk about. We're going to be back in less than an hour's time. We're going to continue. The gang is all back beyond the bell. Join us at 4 p.m. Wall Street time as we wrap up the first trading day here in the United States of 2024. We'll see you at 4 p.m.
Traveling Wilburys?
Yes.
Yeah, Traveling Wilburys.
Well done, well done.
Well, I was a big Roy Orbison fan when I was little.
Okay.
You know, when you're a kid, you could become obsessed with a certain artist. Like my son, who's going to be 5 soon, he likes David Byrne. Just like every time we get in the car, he wants to listen to David Byrne.
But is it because you guys play it?
It's because we played, the concert that he did a few years ago, and it's like that's his reference point for music at this point. So it's like, okay, so that was me and Roy Orbison.
I will say.
So I like the traveling.
I totally get it. daughter grew up on the Concert for George because that's what my husband and I were so into. So it was all about, unfortunately, the passing of George Harrison. But Eric Clapton put together this incredible concert of all his music and the musicians who were part of it. And so, yeah, there was no Barney. There was none of that in our house.
Hey, that's...
And we would play it, and she would bop around to it. So it was like kind of great because we loved it, and it was a really big concert and lots of music. So.
And you get spared from the traditional kids' fare, which leaves a little to be desired. Anyway, we'll play some Traveling Wilburys at home later tonight.
All you new parents, just a little advice. Just play that, and you'll be very, very happy.
I want to take a look at the markets, Carol, because
sure.
the NASDAQ, as you mentioned, is down over 2%. We're seeing shares of the major indices at their lowest levels of the day. The S&P 500 down more than 0.9% right now. The Dow down more than 0.2%.
I guess what I would say, and it was interesting, I actually finally made it back after traveling in COVID last week and joining Katie and Manus Cranny on the surveillance team in the morning. And we talked to a lot of different market guests. And I feel like in terms of a theme as we were getting ready for 2024 is that there was a bit of a dialing back in terms of the thoughts about how aggressive the U.S. Central Bank, the Federal Reserve, would be. You know, markets have been pricing in, about 150 basis points of cuts this year. And there was a dialing back in terms of that as we try to keep kind of still a close watch to make sure inflation doesn't rear its ugly head again.
So this is a question that I have for our markets guests a little later in the program, but is this a macro story or is it a collection of micro stories?
What do you mean?
Is the decline that we're seeing today a result of, the stocks being down as a result of ASML Holdings canceling shipments of some of its machine? Or is it because Apple's down the most since August and at its lowest level since a couple months ago? And all of this is just putting pressure on the indices. Tesla missing on deliveries, Rivian taking a hit. It's like a lot of micro company-specific stories today rather than any macro themes or economic news that we're getting.
We did hear a lot of guests saying it's going to, you got to look for specific fundamental stories and look for stocks that are undervalued versus some of those who really had a big run-up in 2023. All right, so folks, it is a new year, and we've got a bunch of economic data points coming this week, a lot of it on the labor market, culminating in the monthly jobs report come Friday. We also get FOMC minutes from the last meeting of 2023. As you know, we have constantly, Tim, couched everything in the past 4 years against the global pandemic.
The big question, of course, is, what do we see moving forward? Well, according to Bloomberg opinion columnist Allison Schrager, this year we can probably put the pandemic dividend to rest. With more on her column, let's bring in Allison Schrager. She's Bloomberg opinion columnist and senior fellow at the Manhattan Institute. Allison, good to have you with us this afternoon. So what exactly has been the pandemic dividend? Carol and I were talking about it earlier.
We were.
I can't believe it's been almost 4 years since the start of the pandemic. And what's the impact that the pandemic dividend has had?
Well, it's hard to say a dividend because, although I call it that, just because it's been such an economy that effectively gave us a free lunch when it came to monetary policy. There's a reason why every economist thought there'd be a recession to bring down inflation, because it's always been true in the past. There are certain things about the pandemic that made the economy kind of a little unusual this time that meant that we pretty much could have what seems like a soft landing so far. Effectively, you had a very tight labor market, and you had households with a sort of very healthy balance sheet, which if you compare that to 2008 was really different. So you had more trade-offs. So effectively, you could raise rates. You also had people less sensitive to rates, largely because of the mortgage market. And you could just effectively have what seemed like costless monetary policy. But it seems that there's a lot of reasons to think this wouldn't be the case going forward.
So in terms of household spending, Allison, I don't need to tell you, right? It's so important in terms of consumer spending to the U.S. economy specifically. Household spending, at this point, we keep talking about, credit card debt, the buy now, pay later programs. We've seen an increase in an uptick on that. Is it going to be tough for consumers to continue spending after getting really some nice juice, if you will, through the pandemic, courtesy of the government?
Well, I think what we're seeing, if we look at the data very carefully, is a tale of two economies. So the bottom 50% had some savings left over from the pandemic, but those are largely gone, and that might be why we're starting to see delinquencies up for credit cards. But for the top 50%, they still have a lot of cash, and housing prices are still largely higher, and you have a lot of people locked into cheap housing costs. So it's sort of the have and the have-not. Some people are walking away richer, and some people finally have caught up with them. And we're seeing saving rates fall, and we're seeing much thinner balance sheets for the bottom 50%.
What about when it comes to the labor market? we keep hearing about this incredibly strong labor market. Month after month, we're seeing hundreds of thousands of jobs added to the payrolls. We're not hearing it from companies the same way when it comes to the fight for talent. But how are you reading into labor numbers?
Well, I mean, if you look at vacancies, they still look way up, which suggests still a labor market. And anecdotally, I keep hearing employers saying they can't find talent. But a study came out from the Minneapolis Central Bank that found that how we're measuring vacancies might be wrong. And they have an adjusted measure that accounts for new technology and how people search for jobs. And they found that actually vacancies are pretty much where they were pre-pandemic. So, a healthy labor market, but not the tons of, say, slack in it that we had like maybe a year ago.
Allison, that 2% mark that the Fed has promised, reading a bunch of stories last week, I think by one metric we've already gotten there, but there's still that concern in talking to a lot of market guests that we could see another uptick potentially. So how will the Fed's pursuit of making sure no more inflation can come back and rear its ugly head is going to potentially put a soft landing at risk?
Yeah, well, I think the way I'm thinking of it is there's a lot less room for error, as opposed to you had a lot of room for error before. And I think the way I think about it is we have no idea what's going to happen. One thing's for sure, shocks are going to happen we can't anticipate. And the economy is just all around less resilient. So if there is an oil price shock, I said expectations appear to be anchored, but there's some signs that they're not so well anchored anymore. So if we do see this uptick in inflation, it could really take hold. Do you think pre-pandemic people had no concept of inflation? People our age really didn't have much memory of it. But now people sort of expect it. So if there is a shock that increases inflation in any way, then we could see expectations become destabilized, and then the Fed will be in a much more of a bind.
I went to buy a Christmas tree. It was off the chart.
Where did you buy it?
Locally, like,
How
up
much
the
was
street.
it?
I'm not even going to.
I'll tell you how much I paid for our Christmas tree.
Hundreds of dollars.
Hundreds? Wow. I paid $80.
I'm just going to tell you.
I think it was actually $74 plus tax.
It was crazy. And we were kind of,
I'm just going to throw out some advice for next year.
Yeah,
Apparently, you have to go to the big box stores, which is what we did.
I remember someone, I think.
It was like half the price of just going up the street.
Like Home Depot, even a Whole Foods.
Yeah.
Like they do trees, I think, like right away, and it's less expensive.
Yeah, but I threw out my back pulling it off the car. So
that's your doctor bill.
So that's the payment that I get. Okay, I want to get back to Allison. First of all, Allison, thank you for saying that we have no idea what's actually going to happen. That's a refreshing thing to hear at the beginning of the year when everyone is out predicting everything. You mentioned a potential oil price shock. What else is on your radar that we should be watching here?
Well, as I said, I'm also looking for sort of surprises, things to happen to the labor market. I think that's the big concern, because that's, ultimately I think if people experience sort of job insecurity, then that will make spending completely collapse. And that's largely been holding up the economy, is a feeling of this resilience. So I think anything could happen to the labor market. Certainly the geopolitical situation can mean all sorts of sort of surprising things. So, I mean, those are the two things I'm really looking at. Because oil prices tend to, anyway, they're not really in core inflation that the Fed looks at. They do really sort of shape perceptions and honestly the bottom line for most households.
Yeah, they only mean something if you fill up the tank, which I do regularly.
Just a reminder for our friends in California. Well, they don't need to be reminded. Our friends outside of California, how expensive gas is there. Right. Routinely $5 a gallon.
In California?
And driving back from the airport here the other night, it was, under $3 a gallon. Wow, just a reminder how much more expensive it is in California.
It's a really big difference.
Yeah.
All right, Allison Traeger, as we said, Bloomberg Opinion columnist, senior fellow at the Manhattan Institute. Check her out on the Bloomberg terminal at Bloomberg.com.
Hundreds of dollars for a tree?
It was delivered.
But
still, even that was just a piece.
So it's the delivery person's back that has been thrown out as a result
spent.
of the tree.
And it got kind of lost in the shuffle. My daughter was trying to do us a favor.
Is it still up? Is the tree still up?
I'm keeping it through Easter. This is Bloomberg Business Week.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg. 39 minutes to go until we wrap up the first trading day of 2024. And we got a lot of red on the screen right now. The Dow, the S&P, NASDAQ 100 index, and now the Russell 2000, all trading lower. We begin with the Russell 2000 index of small cap shares, down 1% right now. NASDAQ 100 index down 2.1%, down 360 points. NASDAQ Composite Index down 314, down 2.1%. S&P 500 down 42, drop there of 0.9%. Dow Industrials down 66, a decline of 0.2%. Stocks and treasuries dropped as traders trim their bets on interest rate cuts. We've got the 10-year now yielding 3.93% with a 2-year 4.32%. Spot gold lower a little change, down 0.1%, 2,060 the ounce. West Texas Intermediate crude down 1.5%, 70.60 a barrel. We've got crude oil pairing gains as broad risk-off sentiment undercuts concerns about escalating conflict in the Red Sea. Now, as for the overall backdrop for energy stocks, Sarah Hunt is chief market strategist at Alpine Saxon Woods.
We think of energy as an area where you need to have some position, but you trade around that position, and you get heavier when you think that you've got an opportunity, and you get lighter when you think that the market is not going your way. When the supply came up a lot, that's where you sort of lighten up on your energy positions. I don't think you want to be out of it entirely. You've got a lot of very good dividend yields in those, and you've got a lot of stocks that act better in a bad market than some of the other things do. So I think that's something you want to trade around, and we still think that energy has a longer tail.
And you can hear more of the conversation with Sarah Hunt on the Surveillance podcast. You can download it wherever you get your podcasts. Oil stocks higher across the board. ExxonMobil up 2.3%. ADRs of BP up 0.3%. Chevron up now by 0.4%. Briefly, cannot ignore Bitcoin today, up 3.1%, just below 44,996 on Bitcoin. Recapping stocks lower, S&P down 0.9%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Yeah, that trade on Bitcoin really catches my attention, right?
Yeah, I mean, highest since 2022.
Yeah, and a big rally last year.
Stock market.
Yeah, risk on.
Interesting.
Although the stock market, right, in a different mood today versus Bitcoin. Hey, listen, I don't know if you guys have noticed, more challenges it seems for Rivian Automotive. Shares are tanking. They're down about 10% today, so near their lows of the session after missing expectations for quarterly electric vehicle deliveries. And then, Tim, you've got something being made official. Tesla no longer the global top seller of EVs. And that stock, it's been bouncing around today, right now down about 0.7%.
Yeah, China's BYD delivered more, becoming the new #1 in EVs, driven mainly by its much broader lineup of cheaper models in China. We got a lot to talk about for Bloomberg Plugged In. It's our weekly look at the world of EVs. With us is Ed Ludlow, the co-host of Bloomberg Technology. He's in our San Francisco bureau. And I want to start with Tesla versus BYD, because most people listening right now, even if they've heard of BYD, the Warren Buffett-backed Tesla competitor, EV maker in China, they've never even seen one of these cars driving around. What does BYD's lineup look like?
Well, that is the story, that the concentration of what they do is in mainland China, serving a domestic market where they make lots of different EV models, but the principal difference between BYD and Tesla is that it's at a lower price point. And one thing that BYD does that's very different from Tesla is that alongside battery electric cars, full plug-in battery electric, they also do plug-in hybrids, where they sell many of them as well. So you're quite right to point out that in the fourth quarter, the final 3 months of 2023, BYD sold 526,409 fully battery electric cars, most of them in China, whereas Tesla handed over 484,507 globally. But if you aggregate it over the course of the year, BYD is only bigger than Tesla on an annual basis in 2023 if you include plug-in hybrids. But Tesla still sold more battery electric overall that year.
But is the trend clear?
Oh, the trend is clear, and so we knew that this was going to happen going into these fourth quarter deliveries. The question more on Tesla's side is, Where are they still growing geographically? And I had Dan Levy of Barclays on the show earlier today saying that, yeah, look, it's possible you can have Tesla continuing to grow in China because it doesn't make the lower end EV. It's used price cuts as a lever, particularly in China, but it's still seen as more of a premium product there than BYD. Then the next question is, what about those early adopters? If you're an early adopter and you were like the first to get into an EV and you've been and gone, what's left over on the demand side?
I do wonder, what about China? Do they love having Tesla there? Not only, making vehicles, it's a higher end product. Give us some backdrop and some history there. Yeah.
It's fair to say that Tesla and indeed Elon Musk directly has kind of had a up and down relationship with China. The Chinese government was incredibly supportive for the construction in the first place of the Shanghai plant. 50% of all of Tesla's vehicles globally are built in China, in Shanghai. So it's clearly an engine room for their production base. And they were very helpful in financing, things like that. There have been some clashes over data, the ownership of Tesla vehicles by government officials, for example. But on the whole, it's clearly an important relationship between the two. The big difference between what's happening in China and what's happening here in North America is there are just many, many different EV makers. There are so many more models out there that you can buy. And as you pointed out at the top of the segment, many of them the average American would never even have heard of, the brand nor the model. And so it's a more fiercely competitive market with many more players.
Does it tell us anything about how an EV market could unfold here in the U.S., or are the big three just too entrenched in American society?
Tim, I think I heard you praising your last guest for saying that we don't know what's going to happen in 2024, and that's refreshing. And I think that is the answer for the EV market. There is certainly now a big question mark over demand. In the past, Tesla, as an example, has leaned on the idea that its production was greater than its deliveries because there's always a mad scramble at the end of the quarter where vehicles get caught in transit. But if you move past that, and it's relevant with Rivian as well, you do come to the point where you ask, is the demand really there? That will be the question for 2024. And in this market, in particular North America, you will have seen the news over the holidays about the federal tax credit. The number of EV models in this country that are eligible has basically halved from 24 to just 13. And those rules are now determined by basically, if you want to buy an EV and you want it to be eligible for the full $7,500 federal tax credit, which is a big incentive, right, to buy something if $7,500 off, it depends on the exposure that its components have to Chinese ownership. In other words, if your battery has a component that has ownership by a Chinese company greater than 25%, it won't be eligible for that tax credit. And incentives are really key in this market still.
I do wonder too, Ed, when we talk about the EV space, Tesla certainly had the first mover advantage. We talked about that, I feel like, for some time here, how that really helped Elon Musk and Tesla specifically. But as more and more companies, higher end, lower end, come into the EV market, does it make it more complicated for Tesla, or is it just a case if it's going to be a market with, like the auto market today, a lot of different players?
Yeah, I mean, the concern that a lot of analysts have about Tesla is that it doesn't have a very refreshed lineup. We talk about the Cybertruck being the kind of big story at the end of 2023, but most analysts see that being a pretty low volume product. If you are kind of a sci-fi fan and you're an adventurer and you like being a bit different, you might buy the Cybertruck. So that's the risk. There is an advantage, and many maintain that being the market incumbent, particularly in North America, is Tesla's strong point. But there is also brand loyalty in this country. I think I've brought this up on this segment so many times, but if your father drove an F-150 and your grandfather drove an F-150 and somebody offers you an electric F-150, there's a good chance you'll buy it. And so that's the concern for analysts. They want to see Tesla bring in different types of models to keep the lineup fresh, to attract new buyers, or bring in models that more closely match the type of car that a gas engine car owner already drives.
Well, and Elon is said to be, doing a revamp of its Model Y from its China plant. So maybe he is listening to what the public is saying.
Yeah, and they did that with the Model 3 too, but what was so interesting is they did it in Asia or China first, then Europe, and we're waiting for those things to materialize in North America. Conversely, the Cybertruck is in North America only right now in really low volume. So they have different strategies depending on that product type.
Hey, just want to get your thoughts on Rivian, Ed. Shares down now by about 10.7%, falling the most in almost 3 months. The company reported quarterly deliveries that missed expectations. Why is the stock taking such a hit with this kind of, slight miss?
Yeah, it depends how much you believe the delivery story that Rivian tried to paint on the last earnings call. Rivian makes 2 consumer EVs, a pickup truck and an SUV, and it makes a commercial van for Amazon. And what they guided us going into this quarter was that the holidays are the biggest time of year for Amazon. They're not going to take delivery of brand new vans while they're trying to maximize those already on the road. It's just logistically too hard. So they said there would be a discrepancy between production and delivery, where delivery was lower because Amazon would opt not to take delivery of those bug-eyed delivery vans. But the CEO, RJ Scaringe, has told me over a number of years now, the van is only 20% of production. So you do the math and say, okay, well, you warned us this would happen. You're going to deliver fewer electric vans, but the vans are only 20% of your production. So why is overall production so much higher than delivery? And what does that tell us about the demand for your consumer vehicles? And there seems to be a lot of concern that that's not adding up somewhere in the market's mind.
All right, we're going to leave it on that note. As Tim mentioned, Rivian shares down about 10% in today's session. Company reports February 21st, so mark your calendars in terms of an update. Ed Ludlow, so appreciate it, co-host of Bloomberg Technology in our San Francisco bureau.
Hey, let's get a world and national news update. We got Dan Schwartzman in for Nancy Lyons in the Bloomberg newsroom. Hey, Dan.
Hey, Tim and Carol. Harvard University President Claudine Gay has confirmed a Harvard Crimson report. She is resigning, which ends the shortest presidential tenure in the university's history. Gay served just 6 months and 2 days and had come under increased scrutiny after her disastrous December 5th congressional testimony on anti-Semitism on Harvard's campus, as well as multiple allegations of plagiarism in her academic work. Harvard says Provost Alan Garber is going to be named the interim president. 6 people have been reportedly killed in Beirut, Lebanon, in a suspected Israeli drone strike. The state-run Lebanese national news agency says an office belonging to Hamas was hit. The attack is the first on the Lebanese capital in nearly 2 decades. According to the terror organization, the deputy head of their Politburo, Saleh al-Aruri, was killed. Al-Aruri, who is also known as a mastermind behind the Palestinian terror group's armed wing in the West Bank, is the most senior Hamas member so far to be eliminated since the October 7th attack on Israel. Maersk says it's going to once again stop letting its container ships sail through the Red Sea as more vessels have come under attack from the Iranian-backed Houthi militants. The attacks have continued despite the presence of an international coalition of Navy ships led by the U.S. meant to protect the transiting ships. Meanwhile, tensions in the region have risen even higher as Iran has dispatched a warship to the Red Sea. Bloomberg opinion columnist Bobby Ghosh says the old Iranian ship would quickly be outmatched by the U.S. and allies, and its presence is largely symbolic at this point.
This is primarily signaling. It is there to reassure the Houthis that they are not alone, and it is there to signal to the rest of the world that Iran has a role to play.
That's Bloomberg opinion columnist Bobby Ghosh. Around 12% of all global trade traverses, through the Red Sea as it leads to the Suez Canal and the Mediterranean. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Dan Schwartzman and this is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ 100 index, and yes, the Russell 2000, all in the red. In fact, we're at the lows of the day right now on the S&P. Let's head right over to the first word breaking news desk for today's afternoon call. First time this trading year, here he is, Bill Maloney.
Start today amid losses in tech. The Dow is currently down 80 points. S&P's dropped 44, and NASDAQ is off by 2.1%. The U.S. 10-year yield at 3.94%. Gold is down 2. Oil trading in the red, but Bitcoin is higher by 3.5%. Among the main 11 S&P sectors, leaders were energy and healthcare. Tech and telecom were under pressure, and leaders to the upside in the Dow, Merck and Amgen, while Intel fell 5% and led to the downside. In other news, Moderna gained as much as 16% amid gains in biotech and pharma. And wrapping things up, Apple fell 4.4%, the most since September, as Barclays downgraded the stock. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney. To hear live breaking news over your Bloomberg, type squawk, SQUA, on your Bloomberg terminal. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's
the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, just under 18 minutes to go in the first trading day of 2024 here in the United States. And we've got stocks down across the board, as you just heard from Charlie. Really, the underperformance today in the NASDAQ, down about 2%.
I'm still writing 2023 on my checks.
I was just going to say, do you still? Like,
No, the joke is that we don't write checks anymore. So.
I think I have one or two people that I sometimes write a check to, but yeah. Remember we used to run out, like, oh, I got to order new checks. No.
The checks that I have are like 3 addresses ago.
3 addresses.
Yeah.
What are you saying? What are you saying? I will tell you what our next guest is saying. He says, cash is still king. Let's get to the drive to the close. With us is Rich Weiss, Chief Investment Officer, Multi-Asset Strategist over at American Century Investments, $230 billion in assets under management. And Tim Ridge is joining us on Zoom from Los Angeles.
Hey, Rich, good to have you with us this afternoon from sunny LA. Why is cash still king?
Well, it's been king, I'd argue. For the last 2 years, if you look from the start of 2022 through the end of 2023, cash basically outperformed most equities. Maybe not the Magnificent Seven, but most equity portfolios. So cash has been king, likely to be king at least for the first half of this coming year. At least we believe. You can make the argument that stocks have gotten a little ahead of themselves. Whether or not we have a hard or soft landing, we don't believe there's going to be 6 Fed rate cuts this year. And right now, the U.S. has this, I guess you'd call it a dubious distinction of topping the charts in the developed economy world on 2 key financial ratios, debt to GDP and PE ratio. Which are hard to reconcile if you're betting on equities this first 6 months of this year.
But what if you had cash that you wanted to deploy over the last couple of years and you kept it on the sidelines because money market funds were paying you 5.25%, and you missed this run-up at the end of 2023, and you're sitting there with this pile of cash, and you're like, wait a second, now I'm back to where I started in early 2022.
Hey, money manager of mine.
Yeah.
We missed the rally.
Yeah, listen, market timing in the short term, it's a tough thing. I'd rather call sunspot activity, quite frankly. But for the longer term, any reasonable investment horizon, again, I think that the downside potential of stocks, the disappointment potential here economically and in earnings outweighs, the potential upside. And cash is safe, high grade, fixed income. Just suggest you wait a little bit longer here. Just wait for some capitulation.
Well,
right?
I feel
Some
like people.
pullback.
I got to say, Rich, I feel like investors are getting the memo. U.S. money market fund assets rebounded after 2 weekly outflows. So assets rose to $5.89 trillion in the week to December 27th. This is coming from the Investment Company Institute. So we did see some back-to-back weekly declines, but we saw the money market assets come back, led higher by flows into government funds. You know, we talked a lot last week on air about all of the money sitting in money market funds, and when it comes back, does it ultimately head into the equity market? Is that your best guess right now?
Yeah, I'd say that's a nice summary of it. Money building on the sidelines, but it's just hard to bet on equities right now, again, because it's hard to see where the fuel is for higher PE ratios. If you assume corporate earnings are going to grow by what, maybe 5% this year, maybe 5 to 10% at best, with interest rates where they are, where's the fuel? The manufacturing sector still in recession, housing sector still not doing well, arguably might be turning the corner, but yet to be seen. You have the lagged effects of monetary policy still wafting their way through the economy. Obviously, you have geopolitics out there as a cloud in the horizon, and an election year. It's just that there's a lot of headwinds here for equities, a lot of potential downside. It's just the safe play, okay, a bird in hand seems to be the more prudent path, at least for many of our portfolios at the margin. I'm not saying to get out of stocks altogether, but as you're seeing today, taking some profits from a very healthy last year, at least in the last quarter run up, and wait and see what happens here on the economic side, especially in the labor markets. And we're going to get a good look at that this week, right?
Yeah, we will. So my question for you is about capitulation and what capitulation actually looks like. When you say people should wait and see or wait for capitulation, what's a signal to you that they should be buying again?
Oh, it's going to mean a 10 or a 20% crack in the equity markets. Let's say 10% drawdown. You'll forgive the expression, they call it the market puke. Okay, but it's basically when the market gets it out of its system, it takes out some of this fluff in PE ratios right now. Where's the S&P sitting? I think it's somewhere around 20, 23 times earnings. Again, with rates where they are now, corporate earnings maybe in the single digits this year. That's a lot to ask from equities. And so we would expect a drawback in equities in this first quarter at some point.
A little perspective, though. I just want to jump in for a second because, you know, listening in on some of the guests on earlier morning TV and radio, one of the guests pointing out that if you look at the market over the last 2 years, the S&P 500, it's really been a sideways move. We really haven't gone anywhere. We're up maybe 0.08%. So having said that, I don't know, what kind of insight does that tell you about kind of the levels we are today, and maybe there is some more room to the upside despite the dramatic rally we saw late last year? And how much of it is contingent on soft landing versus hard landing?
Right. I think, Mark, equity market arguably fairly priced, to your point, Carol, that it's basically gone sideways, and it's a coin flip depending on where we're going economically here. But our view, if you look, let's say at the last, I think it's 12, monetary policy hike sessions. I think that goes back to 1960 or so. 8 of those have led to recession. Only 4 were soft landings. And the 8 that did lead to a hard landing were very similar to the scenario we just saw, where rates rose precipitously in a hurry, and the manufacturing and housing sectors got hit hard. So this scenario looks a lot more to us like those hard landing scenarios. But again, whether it's a hard or soft landing, I think that's an academic debate to some point, because I believe the equity markets already priced in at least a good portion of the soft landing, Goldilocks, immaculate disinflation, Santa Claus rally, all of which have one thing in common, which is that they're fairy tales.
All right. Well, we shall see. Of course, it's just the first trading day of 2024. Rich Weiss, Chief Investment Officer of Multi-Asset Strategies at American Century Investments on Zoom from LA. This is Bloomberg.
Your company news headlines on Bloomberg Radio.
From Bloomberg World headquarters, I'm Charlie Pellet. Fidelity has cut the valuation of its stake in Elon Musk's X, reflecting a 72% markdown since the billionaire bought the former Twitter a little more than a year ago. The investment firm, which helped Musk complete the $44 billion purchase, cut the value of its holding in X by 19% in its November portfolio update for the Blue Chip Growth Fund, compared with the September filing, according to calculations by Bloomberg. Apple shares trading lower now by 3.7%. Apple got itself a new bear as expectations of soft demand for its latest iPhone prompted analysts at Barclays to downgrade the stock. And with more, here's Bloomberg's Kriti Gupta.
There are some weak iPhone trends that you really have to keep an eye on. They're actually cutting their rating to underweight from equal weight earlier. You know, when they performed their channel checks, they showed weakness in iPhone volumes, and get this, a lack of bounce back. That is a direct quote in Macs, iPads, and wearables. So again, spooking a lot of those Apple investors. The question is how much of this is an Apple story as opposed to a more macro story, and it's something that you're kind of seeing in big tech across the board.
And again, that's Kriti Gupta reporting. Apple shares are lower now by 3.7%. Chevron will book fourth quarter charges of $3.5 to $4 billion, citing assets it sold in the Gulf of Mexico and policies in the state of California that prompted the company to slash its investments there. We've got oil stocks higher. Chevron up now by 0.3%. Those are our top company stories. This is Bloomberg.
This is Bloomberg Business Week with Carol Messer and Tim Stenovec on Bloomberg Radio.
All right, everybody, just about 4.5 minutes left in today's trading session. We're going to talk with our TV colleagues in just a moment to wrap up the first trading day of 2024 here in the United States. Having said that, while equities are pulling off a little bit of that risk trade that we saw so much in late 2020.
Yeah, that's right. Bitcoin had an amazing 2023.
Did.
And it's looking like it's got a pretty good start to 2024.
Up 157%? Is that right? Yeah, that's
crazy.
right. Yeah.
Did you see it coming, Carol?
No.
No. Yeah, neither did I.
I feel like certainly late 2023, we saw, I feel like, a major risk on trade and a lot of assets and asset classes kind of doing well. We certainly saw it. But to see it above 45,000 for the first time in about 2 years,
yeah, close to 2 years.
Yeah.
Yeah, this is all about in anticipation
Yes.
of an approval of an ETF that invests directly in the biggest token.
Yeah, people are looking at that January 10th deadline for the SEC to give its blessing for a spot ETF Bitcoin. I mean, we're getting closer to it. Late last year, we talked to Kathy Wood just about that because she certainly has a filing and has talked about the conversations going back before the this SEC and certainly her firm, and it kind of getting more feeling like the conversation was more about maybe some of the final things you would be talking about. So dare I say that there was optimism in her voice about getting that approval. Don't want to read too much. You can check out that conversation.
I was just going to say you can
Yeah.
look at that part of that conversation is actually in the most recent story about Bitcoin that we have on the Bloomberg terminal. Do you remember, Carol, how high Bitcoin got back in 2021?
Was it above 57, 58?
69,000.
69.
Close to 69,000. So that was back in 2021. So it's got a ways to go to get there. Again, this is all over optimism of an ETF being approved, spot Bitcoin ETF being approved, which my understanding is it's all about people being able to trade, like, institutions being able to trade. But yeah, I mean, if you want to buy Bitcoin, you can buy Bitcoin.
Yeah, exactly. It's going to give
you don't need an
potentially
ETF
wider
to do it.
access. No, like think about the access, right, for just individual investors, retail investors, in terms of tapping into this. So anyway, we're watching Bitcoin certainly on this first trading day here in 2024. All right, folks, getting ready to wrap up that day. We want to talk about the markets. We're going to head over to our TV colleagues. This as we do see stocks selling. Right now, though, it's over to our TV team because Beyond the Bell starts right now.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Scarlett Fu. We're counting you down to the closing bell. And here to help take us beyond the bell. It's a global simulcast with our friends Carol Masser and Tim Stenovec. Welcome to our audiences across all of our Bloomberg platforms on the first trading day of the new year, a trading day that has stocks deep in the red.
Yeah, definitely deep in the red across the board. The NASDAQ in particular taking it on the chin. And I'm looking at something like the SOX, which is down about 4%. We know the story. It's been among the most read about ASML holdings seemingly to not ship certain pieces of equipment to China under pressure from the United States. So again, politics getting into the world of technology, specifically when it comes to the semiconductor world. Every name in the SOX, I should say, is down in today's session.
Rich Weiss over at American Century Investments actually thinks we're going to be seeing a lot of red, Scarlett, this quarter. He's pretty bearish. He thinks that we're going to see a 10 to 20% crack in the equity markets just in the first quarter or second quarter of the year. He thinks a lot of that has to do with the fact that the market is pricing in more rate cuts than the Fed is going to do. He does not think that there's going to be 6 rate cuts this year, but he said cash was king over the last 2 years, and it continues to be king until we see more of a pullback in equities.
Yeah, we just heard the same from Mike Reynolds of Glenmead, who says you want to avoid equities and stick with fixed income and cash because you're getting paid to wait, and he says recession is not off the table, despite what everyone, the consensus here.
Yeah, you're still getting over 5% here on some of those T-bills here. And of course, even if you go out on the duration spectrum, you can still lock in 4% rate, which given the drop in inflation seems like a pretty good value proposition for some folks, at least for those folks who are scared of what could come for the equity markets. At least here on this day, it was a down day almost across the board. As we get the closing bells here in New York, the Dow Jones Industrial Average trying to poke into the green. It's been oscillating between gains and losses for a good portion of the day. Right now, it's up about 30 points. Of course, we have to wait for these numbers to settle, but that would be good for a gain of about 0.1%. Meanwhile, the S&P 500 decidedly to the downside, lower by about 0.6%. The NASDAQ composite well off the lows of the day, but still going to finish the day down by about 1.6%. And the Russell 2000 closing out the day down 14 points or 0.7%.
All right, a quick check on the S&P 500 in terms of winners, losers. You had 262 names, Scarlett, to the upside, 241 to the downside. So almost an even split behind kind of that major market average close.
It might be an even split, but you look at what sectors are leading to the downside, and that tells you a lot about why the indexes, particularly the NASDAQ 100, falling the most since late October. You've got tech of all stripes essentially leading to the downside. Semiconductor stocks, tech hardware, software and services, media and entertainment, all down at least 1.3%. On the upside, you've got telecom services names like your Verizon or AT&T, pharma names like Moderna, and food, beverage, and tobacco. Definitely one of your defensive sectors gaining at least 1.8%.
All right, guys, let's get to some of the individual gainers in this Tuesday trade. Citigroup up about 3.1%. Mike Mayo of Wells Fargo says Citi shares to double over the next 3 years to $119 a share in 2026. Stock closing at about $53 a share. He says the bank's metamorphosis should make it more profitable. The restructuring he's talking about taking place under CEO Jane Fraser. He says Mayo expecting the bank to become simpler and again more profitable. If shares rose above $100, folks, that would mark its highest level since 2008, according to our data here at Bloomberg. Company does report on January 12th. Remember, those bank earnings are not so far away from us. Moderna, Scarlett, you mentioned it. Moderna up 13%, top in the S&P 500, top in the NASDAQ as well. Back in favor today after dropping about 44% last year specifically. This coming from Oppenheimer, upgrading the stock to a buy, said it expects the biotech to have 5 products approved by 2026 and giving the stock a $142 a share, 12 to 18-month price target. The stock closing at about $112 a share, $112.50 to be exact. This may feel random. If Katie was here, she would totally get it. But Abercrombie and Fitch rallying today, it gained 285% last year, guys. Remember we were all focused on NVIDIA? Well, check it out. It was quite a gainer last year. It's rallying again today, up another 3%. I don't know why it's rallying. Late December, the company talked about, kind of removing maybe some of its supply chain to avoid the Red Sea. It's a little worried about that. There's a kind of a news connection, but no real specific catalyst. But investors continue to pour money into it after way outperformance, Tim, in 2020.
I missed that last year. Yeah.
Random.
Okay. Hey, let's go to decliners. No shortage of decliners today. We got to talk about Apple shares having their worst day since September, down 3.6%. This thanks to analysts at Barclays who cut their rating on the stock, also lowered their price target. The concern here is weakness in iPhone. They did some channel checks and said they're underwhelmed with what they're seeing with iPhone sales. And they're concerned also that the next iPhone, the iPhone 16, which, it's a little early to be talking about that if you're a consumer, but if you're an analyst, you're not. It's not so early to be talking about that. They're concerned that it won't have the features that will prompt people to upgrade. Shares.
What does Mark Gurman say? I mean, he's the only person I listen to.
He's the only person.
Because everybody else gets it wrong.
You and me.
Those are some true words, Romaine. I mean, he really has a perfect track record. Yeah. I haven't asked Mark about this stuff, but Mark, get in touch.
We'll be talking to Mark soon.
He's
are you guys talking to him later?
Yeah, we are.
Okay, so
it's not even an external call.
So tell me what he says. Tell me what he says about this. It's not just iPhones though that has the company that has the analysts concerned.
What else do they sell?
Macs, iPads, and wearables. They're concerned about a lack of bounce back.
What's not included
Remember
there?
when they came out with that polishing cloth? Like
services,
$50 or something?
I guess.
AirTags.
Yeah, AirTags.
I love AirTags.
You never lose them.
I found my luggage.
Okay,
courtesy of an AirTag.
Let's move on. ASML holding. I want to look at ADRs of ASML shares falling. ADRs, I should say, falling 5.3%. Carol mentioned this at at the top that shares of the Dutch semiconductor manufacturing equipment maker were under pressure after our Bloomberg News report that the company canceled shipments of some of its machines to China. This at the request of the Biden administration. We're actually going to be speaking with Ian King a little bit later in our program to get more details on what's going on here. Investors sending shares down 5.3%. And then Rivian, let's talk EVs. Shares plunged as much as 11.5% earlier in the session. They finished down 10%, all due to fourth quarter deliveries missing estimates. The question is what does 2024 look like? And we talked to Ed Ludlow about this a little earlier. And there's some confusion about the mix of, they basically make three products right now. They make those Amazon delivery vans, they have the SUV, and they have the truck. So are they actually going to deliver more of those Amazon delivery vans in the first quarter this year when Amazon is less busy with the holiday season? We're going to have to wait and see that.
All right, let's take a quick look at what happened in the yield space here. Some modest gains on the yield side of the equation as the sell-off in Treasuries resumes here. About 7 basis points higher on the 2-year yield on the day here, back to about 4.3 here, and you see the benchmark 10-year yield higher by about 5 basis points. All told here, most of these moves are relatively modest, so we should point out with the yield curve shifting higher, and then you look at what we saw in the swaps market as well as an options market, you do have some folks pairing some of those more extreme bets on Fed rate cuts just a tad here. Maybe we won't get 8 of them this year. Maybe I don't know,
it's a little aggressive, right?
Yeah, I don't know what these people are betting on.
As the economy slowly slows down at that.
Don't you feel like if we have to get 8 cuts, no, the economy's falling apart?
Yes.
That's pretty aggressive.
That's there's no debate on that.
Right?
Yeah. Well, I mean, how much attention should we pay to the data that we did get today? S&P Global, U.S. manufacturing, construction spending, both snapshots of the manufacturing sector, not great. Things are not falling apart, but not great, and that kind of sets the tone.
Hasn't that been weak forever though? But we go back to like the start of last year, right, when everybody was looking at those manufacturing numbers, looking at leading indicators, and saying, "Oh my gosh, the recession is in." And it never happened, and partly because the services side, at least here in the U.S., not only held up, but actually improved to a certain degree that really managed to boost this economy.
Yeah, we were just talking about, was it with Allison Traeger or one of our market guests?
Yeah, Allison Traeger.
Specifically, though, about how the higher end consumer...
Does Carol not remember who she spoke to?
I blame COVID. I blame COVID.
Oh, you got the COVID fog, or the brain, or whatever.
Or I just have a fog. Yeah. No, but what's interesting, the higher end consumer, their balance sheets are still doing okay. It's the lower end consumer. What will we see in terms of the U.S. consumer here in 2024 in the first couple of months of the year?
Do they slow down? Holiday season is over. Like, where does the spending go?
Yeah, I mean, exactly. I think the key number to watch, of course, this week is jobs and what the employment report looks like for December, Romaine. And that's the most important. And, if people are still getting jobs and if companies are still hiring, then the economy is good. I mean, it's kind of as fundamental as that. If the economy is still adding hundreds of thousands of jobs every quarter, then the consumer is still in that position to spend that money on services.
Yeah, it's still adding, though. But, I mean, you think about some of the data points that we've gotten that still shows consumers are under a certain degree of stress that they weren't under maybe a couple of years ago in terms of their cash balances being drained down, credit card balances going up. So there's a lot there.
Right?
That may not be the gloom and doom recession call, but there's certainly not necessarily the free spending, I think, feeling that we had maybe like 2 or 3 years ago.
Yeah, people are canceling their streaming services, right?
I mean, it is, back to Allison Traeger's column earlier, it's what she called the pandemic dividend. And it's going away after 3 years.
Hey, one thing we were remiss, I just want to point out, JP Morgan closing at its highest level on record. So just thought we'd put that out here. The stock was up about 1.2%. They report earnings January 12th, so we'll get into that
Mark
earnings.
your calendar.
Yeah, it's good.
It's
good for Jamie Dimon.
Yeah, it is good for Jamie.
Hopefully he gets a fat bonus this year.
I think
he'll be okay, Romaine. I think he'll be okay.
All right, the fog is settling in.
I mean, I
need
don't
to say
know. It's
goodbye.
hard to get by on $30 million a year.
Ouch. All right, that's a wrap, guys. Our first trading day of 2024, Beyond the Bell, our cross-platform coverage, radio, TV, YouTube, and of course, Bloomberg Originals. We will see you for the Wednesday trade tomorrow. That's what our team here at Bloomberg tried to get to the bottom of. 219 pages.
Did you print out the whole thing?
I did.
You didn't?
I put it up in the queue to print it, and I'm like, yeah, I can't do this.
That's your yearly allotment, Carol. If you did that, If
like
you
to
did that,
print.
no more printing for the entire year for you.
I would be done.
Even if it's on recycled paper.
I cannot do that. It is today's Bloomberg Big Take, by the way. It covers everything, almost everything that Wall Street expects in 2024. The range, Tim, everything from the mother of all rallies to the sell-off for the ages. Talk about a standard deviation.
Hey, it's what makes a market. With more, we welcome on Zoom from London, Bloomberg News senior editor Sam Potter. Sam, good to have you back with us. It's always a treat to talk to you. Thanks for staying up late for us today. So on our last trading day of the year, our most read story was all about Wall Street's best and brightest flopped once again in 2023. So what's useful and productive about surveying Wall Street for what to expect in 2024?
Sorry, Wall Street. To point out what you got wrong.
Yeah, they really put me in a bind with that story at the end of last year. First up, I should just say these are the investment outlooks that the biggest banks, the biggest asset managers and advisors put out every year. They start publishing them in November. Many of them run to 100 pages or more, containing all the wisdom and the forecasts for the year ahead. I've been sort of collating the main calls for these for the last 5 years or so, 5 or 6 years. I've got to say it's interesting this time around because there is dispersion as ever, but actually there's a fairly common consensus among most of the reports, which is, and it's a pretty sort of benign, middle of the road kind of view that the rate hikes that we've seen this past year or two, they're finally going to bite. Economies are going to slow, and that will prompt a central bank pivot somewhere in mid-year, which could pave the way for a bit of a recovery. And modest gains for stocks and bonds are seen. So actually most of the forecasts are sort of cleaving around this fairly benign outlook.
And that doesn't typically happen in terms of kind of a middle of the road thinking, Sam, since you've done this, for us a few times here at Bloomberg, is it more typically some extremes, kind of all over the place?
So the reason that 2023 stood out so much, and that my colleagues did that story last week, was this time last year everyone was very gloomy. They expected recession and not a mild recession. A lot of people were predicting that it was going to be a very tough year as those rate hikes really ground into the economy. And as it happened, the economy held up pretty well. You guys were just talking about that. And then an AI frenzy from nowhere stoked the stock market. And so everyone's forecasts were sort of torn up. This time around, as I say, it's a very kind of, the words they use are like a mild recession, a healthy slowdown, a benign. It's the soft landing, right? It's the successful soft landing, which most of the calls say. Not all of them, as we say. There are still some outliers, but it's unusually kind of conservative, I guess, this year.
It is, but there's also this section on risks that I wanted to highlight, Sam. What were some of the risks, or I guess what is the general theme that runs through the different banks when they talk about risk for this year?
Well, there's the big and very obvious one, which is the election year ahead, which has been talked about quite a lot. I think it works out that more than countries equating to more than half of the global economy will be electing their leaders in the year ahead, or are expected to, led, of course, by the United States. And at this point, that is just too tough to call. All the reports all these poor strategists can do is say, prepare for volatility. It's too early to say. We don't know what's going to happen. So the U.S. election is really a big one. Inflation, has it been vanquished? If it proves stickier than everyone expects, then that could be a bit of a surprise for the market. And also geopolitics. I think in the past 3 or 4 years, it's been the unexpected that has derailed all the Wall Street calls. So the war in Ukraine, and now we have Israel-Gaza. While there is consensus, there's a lot of nervousness, and we see generally risks stacked to the downside.
Yeah, I feel like the geopolitics, one of the things last week, it was so quiet. Every morning we'd come in and futures were like 0.03, like it was like barely moved. We actually got unchanged a couple of times. It was just so quiet. But we were concerned about geopolitics, certainly as we started to see problems in the Red Sea and, some of the big container shippers or the big, trading companies that are so important to moving stuff around in terms of our global supply chain saying, I'm not going to do it. Maersk, again, I think today or in the last 24 hours saying, we're not going to send our ships through there. There's just too much risks at this point. I do feel like it's kind of wild here, Sam, wild in a scary way that we now have the Russia-Ukraine war headed for its third year, right? And then we now have the Middle East where it does feel like things are escalating and that there's a lot of kind of hot points. People last week were talking about more than 100 attacks like in the region. So maybe we are already in a third world war. If you had to say, the biggest risk that maybe faces investors this year, is it geopolitics?
Well, funnily enough, geopolitics, I mentioned it after the election because that seems to be where it comes on the radar. Obviously, the US election in particular has a huge bearing on the geopolitics because the foreign policy of the respective candidates is likely to be quite different. I think geopolitics, a lot of the view is that the Russia-Ukraine war is kind of a known element now. Those energy shocks that we experienced in the early days of the war are not happening so much anymore. There are some rumblings, if the Middle East escalates, obviously that can impact the energy sector. A lot of, I guess, I don't know whether strategists are just getting weary but a lot of people are saying, in the long run, the markets look through these things. They look past these things. So don't worry about it too much. Far more important is the election. And actually, one thing that we haven't mentioned is the fiscal picture, which is looming in the background, in particular in the US, because a lot of people are wondering if the US could keep spending the way it is and how that is going to feed into the election.
Rich Weiss over at American Century Investments was on with us a little bit ago, Sam, and he mentioned the debt to GDP ratio here in the U.S. certainly has him concerned. What else? We only have about 90 seconds left. Carol, I know you want to ask something.
One thing I wanted to ask is AI was such a big momentum play, if you will, and actually turned out to be fundamentally, because we did see some strong numbers from NVIDIA. Is there something else that kind of juices the markets? AI did it last year, those, new class of weight loss drugs. Is there something in terms of a sector or trend? And just got about 40 seconds here.
AI still is what I would say to that. I mean, for the longest time, we all talk ESG and green energy and things, but it never sort of catches fire in the way AI did this year. So a lot of the outlooks are talking about the potential for AI to keep supercharging returns. And it's going to play out. They see it as a theme that's going to run and run over the next couple of years. So AI still. But yeah, these things by their nature come out of the blue, right? So if I'd seen the magic ticket in these outlooks, I would, I wouldn't be telling you guys, but
come on, Sam.
I would tell you if I knew.
You would quit. You would make an investment.
If Sam's not doing the outlook for 2025, we know he found the golden ticket, okay? That's what we know.
That is so true. Didn't somebody win? Was it in Michigan?
Yeah. But I'm talking more important than the lottery is knowing what the market's doing.
Exactly. Sam Potter, thank you so much. We know it is later out there in London, so we were so glad we could bring this story to everybody. Sam Potter, Bloomberg News Senior Editor on Zoom from London. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:21 on Wall Street. We do check markets all day long here at Bloomberg. Another record for the Dow Jones Industrial Average. First trading day of the year. The S&P today managed to eke out a gain of just under 0.1%, up another 25 points, but 37,715 on the Dow. Yes, a record there. S&P today lower by 27 points, while NASDAQ was down 245 points. For NASDAQ, that was a drop today of 1.6%. The S&P, by the way, down 0.6%. Stocks and treasuries kicked off 2024 on a sour note as last year's rally stalled and traders reined in their bets on interest rate cuts. 10-year yield 3.93%, with the 2-year yielding 4.32%. Spot gold down $4.50 the ounce to $2,058, drop there of 0.2%. Big day for Bitcoin, up 3%. Bitcoin now at 44,932, was back above 45,000. West Texas Intermediate crude oil fell 1.6% today, $70.51 a barrel on WTI. So again, recapping, the Dow higher today. The S&P, NASDAQ, they both declined. A downgrade for Apple at Barclays because of expectations of soft demand for its latest iPhone. Barclays analysts led by Tim Long cut their rating on Apple to underweight and the price target to $160. Today we had Apple ending the session down 3.6% at 185.64. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So we just talked with our Sam Potter about what Wall Street is expecting in 2024.
And risks.
And risks. And atop that list, right, was politics and then, of course, geopolitics.
Yeah, we've been hearing this news throughout the day. Worth repeating. Hamas saying that Israel killed a senior leader in Lebanon's capital. Meantime, yesterday, Iran dispatched a warship to the Red Sea after the U.S. Navy destroyed 3 Houthi boats. This a move that risks ratcheting up tensions and complicates Washington's goal of securing a waterway that's vital, Carol, to global trade.
Yeah, exactly. Really key. Container shipping giant Maersk saying it will once again stop letting its vessels sail through the Red Sea. That's after another of its carriers came under attack in the space of a few weeks. So no doubt about it, we are very grateful to have back on with us on this first trading day of 2024 in the U.S. Bloomberg Opinion columnist Bobby Ghosh. He is a member of the Bloomberg Opinion editorial board. He writes on culture. He covered foreign affairs, a special focus on the Middle East and the wider Islamic world. He is back with us on Zoom from New York. Bobby, first of all, Happy New Year. Although I feel like this, we've, kind of are once again inheriting a world that is very complex and tortured in many ways and a lot of stress points. How are you thinking about the situation in the Middle East? Are we already escalating?
Well, Happy New Year to you both. We can always hope for a better year. But yes, short answer is yes, there is a significant escalation. When Iran sends a naval vessel, a destroyer, into the Red Sea, that's not a good sign. There is a large naval flotilla already there, led by the United States and 9 other countries, designed to protect international shipping in a very vital sea lane. 12% of the world's trade travels through that sea lane, and that lane has been disrupted by the Houthis. This is a rebel group in Yemen, which is backed by Iran, which has been firing rockets and drones at international shipping. The Iranians have sent a ship in there. The ship itself is 40 years old, not really much of a threat to the international flotilla, but it is a signal. It is a signal that Iran is on the side of the Houthis. It is a reassurance to the Houthis that they're not alone. It is also a signal to the rest of the world that Iran has a role to play, and it is almost certainly a disruptive one. So for global trade, for international peace, and particularly for regional stability, for all those things, this is not a good sign.
Bobby, I want to ask a question, and at the risk of, I'm not trying to be melodramatic here, but I'm wondering if the U.S. and Iran are essentially fighting a proxy war right now.
Well, Iran has been fighting a proxy war. That's the only way Iran fights its wars for decades now, with everybody in the region and with the United States, whether it is through Hamas or Hezbollah or any number of proxies in Iran, in Iraq, and especially now with the Houthis. These are all groups that are part of what Iran calls its axis of resistance, but really a network of proxy militant groups that Iran trains, finances, provides weapons for. The United States has been trying to keep Iran from breaking out and posing a direct threat to its neighbors and to the wider world. I wouldn't characterize the American position as having sort of being a proxy war, but the Iranian attitude certainly is all about trying to gain strategic advantage for the Islamic Republic without actually putting Iranian feet and Iranian on the ground and Iranian blood on the line.
I feel like there's a lot of global actors out there, Bobby, that really, maybe it's all about just creating destabilization in the United States and undermining the United States, whether it's Iran, whether it's potentially China and other parts of the world. Is this kind of the bigger, broader thing that's going on geopolitically?
Well, it's certainly part of a pattern. We're not yet clear that all of these things are linked, although some really smart people have said so. I don't yet see a clear link between what Russia is trying to do and what North Korea is doing and what the Chinese are doing and what Iran is doing. But what they all have in common is that they regard the United States as the enemy. They regard the world order that the United States has so carefully created and protected for decades. They regard that order as something they would like to manipulate at the cost of American prestige and American position in the world. So they do have a common goal, and it represents a big problem for the United States and its allies to have to deal with all of these people, all of these groups simultaneously.
What's the way that the U.S. can avoid getting drawn into a bigger conflict here, Bobby?
Well, the trick is to provide Israel with enough protection without putting American boots on the ground. This is made even trickier by the fact that the Arab states of the region, Saudi Arabia, United Arab Emirates, are very reluctant to directly engage with Iran in any sort of military way. They're also terrified of the Houthis. They tried to defeat the Houthis by military means and really got badly beaten. So the United States is now relying on Western allies to try and protect those sea lanes. And the mission that the United States is trying to define is very narrow. It's saying, look, this is about protecting world trade, and this is about preventing Iran from disrupting world trade. As far as the argument goes, that's fine. But when you're dealing with the Iranians, who don't always act in a rational manner, and when you're dealing with groups like the Houthis, who are driven by ideological passion, death to Israel is part of their core belief. They chant that slogan all the time. When you're dealing with groups like that, whether or not you can you can decide what the boundaries of the conflict are, is a little up in the air. And to some degree, you have to hold your course and hope that everybody else behaves like a rational actor. And keep your fingers crossed.
It's interesting. There was, I think, the Bloomberg Politics newsletter that went out last week, and they just talked about just the amount of conflicts that are proliferating across several continents, and it's just this wide swath from West Africa through Ukraine to the Middle East, and they are kind of talking about how this could be the prelude to another global conflagration, and that it's not beginning with a bang, but with several bangs. And I feel like we have guests come on over and over, Bobby, that just say, 100 attacks that are going on in the region, in and around the region. It's not just this, obviously what's going on between Israel and Hamas. That's a big one. But I do wonder about everything that's brewing over there. Is that just par for the course, if you will, or it's just something different this time around?
It is a new normal, Carol. I'm afraid this is going to be with us for a long time. And this current conflict between Israel and Hamas has sort of shattered the kind of precarious not peace so much, but a suspension of hostilities that has been in place in Israel for a decade and a half. That's now gone. That's going to have a ripple effect. That's going to cascade around the region. We're already beginning to see that, what's happening with the Houthis in the Red Sea. The one thing that I try to cling on to is that nobody has an interest in a global conflagration. Iran doesn't, the United States doesn't, Russia doesn't, China doesn't. All of these countries depend on a certain degree of global stability just to keep their economies running, just to feed their people, and to arm themselves and in many cases to pad the bank accounts of their leaders. So everybody has a certain amount of interest, varying degrees of interest, in preserving at least a sense of peace. Everyone's pursuing goals through sort of multiple different means, but the hope is that nobody's reckless enough to go over the edge and bring everybody down with it, because the cost of doing that is cataclysmic, not just to the United States, but to everybody.
Well, okay, so 15, 20 seconds, you got to be quick. Does this make the world a little nervous about what could happen for the November U.S. presidential elections, depending on who's in the White House? And just really quickly, Bobby.
Oh, yes, absolutely. Very nervous. The Biden administration, for all its flaws, is predictable and stable. If the election goes the other way, you will have the opposite, something highly unpredictable and highly unstable. That is the last thing the world needs right now.
Only January 2nd, and already a lot on our plate here. Bobby, thank you so much. I know we'll be reaching to you again throughout the year. Bloomberg opinion columnist Bobby Ghosh.
Hey, let's get a check on the latest world and national news. We've got Dan Schwartzman from the Bloomberg 1130 newsroom in New York. Hey, Dan.
Hey, Tim and Carol. 6 people have been killed in Beirut, Lebanon, in a suspected Israeli drone strike. The state-run Lebanese national news agency says an office belonging to Hamas was hit. Now, according to the terror organization, the deputy head of their Politburo, Saleh al-Aruri, was killed. Al-Aruri, who is also known as the mastermind behind the Palestinian terror group's armed wing in the West Bank, is the most senior Hamas member to so far be eliminated since the October 7th attack on Israel. Harvard University President Claudine Gay has resigned, ending the shortest presidential tenure in the university's history. Gay served just 6 months and 2 days and had come under increased scrutiny after her December 5th congressional testimony on anti-Semitism on Harvard's campus, as well as multiple allegations of plagiarism in her academic work. Harvard says Provost Alan Garber is going to be named interim president. At least a dozen gas canisters were found in the car that involved the New Year's Eve crash outside a concert venue in Rochester, New York. 2 people were killed, 3 others taken to local area hospitals. The driver, 35-year-old Syracuse native Michael Avery, is in the hospital with life-threatening injuries. Rochester Mayor Malik Evans says folks were at the concert to have a good time.
These folks were going to see a Grateful Dead tribute band, and they were expecting to be able to ring in the new year and have a good time. But instead, we have individuals that are now going to be burying family members, and we have people who have now life-altering injuries because of the choices that this suspect made.
That's Rochester Mayor Malik Evans. Finally, 5 Coast Guard personnel in Japan killed as a landing Japan Airlines Airbus 350 collided with a taxiing Coast Guard plane at Haneda Airport in Tokyo. All, by the way, passengers and crew safely evacuated. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Dan Schwartzman. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:40 on Wall Street. We do check markets all day long here at Bloomberg. The first trading day of the new year brought 2023's scorching rally to a halt after a more than $8 trillion surge in the S&P 500 last year. Today, the S&P declined 27 points, down 0.6%. The Dow, however, up 25, gain there of 0.1%, while the NASDAQ Composite Index fell 245. For NASDAQ, that was a drop today of 1.6%. Russell 2000 Index lower today by 0.7%. 10-year yield 3.93%, with the 2-year 4.31%. Spot gold down $4 the ounce, little changed at $2,058, down by about 0.2%. West Texas Intermediate crude down 1.5%, $70.54 a barrel. Cannot ignore Bitcoin today. It rallied 3%, 44,951 on Bitcoin, was trading for much of the day above 45,000. Rich Weiss, Chief Investment Officer of Multi-Asset Strategies at American Investments, was a guest right here on Bloomberg Business Week, and he told us he is concerned about a first quarter pullback, which he describes like this.
You'll forgive the expression, they call it the market puke. Okay, but it's basically when the market gets it out of its system, it takes out some of this fluff in PE ratios right now. Where's the S&P sitting? I think it's somewhere around 20, 23 times earnings. Again, with rates where they are now, corporate earnings maybe in the single digits this year, that's a lot to ask from equities. And so we would expect a drawback in equities in this first quarter at some point.
And you can hear more of the conversation with Richard Weiss on the Bloomberg Business Week podcast. Downgrade for Apple today at Barclays because of expectations of soft demand for its latest iPhone. Apple today down 3.6%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Hey, thank you so much for that update, Charlie Pellet. Really appreciate it. Check out the new Bloomberg Business app featuring Apple CarPlay and Android Auto. You can listen to Bloomberg Business Week and all of our Bloomberg radio programs anytime. Just download the Bloomberg Business app on your smartphone and connect your phone to your car. It's free in the Apple App Store or on Google Play.
All right. So, Tim, another big tech story that's top of mind on this first trading day of 2024 is what's going on with ASML Holding. ADRs closing the day down 5.3%. In a Bloomberg exclusive, the Dutch manufacturer of chip-making equipment canceling shipments of some of its machines to China at the request of President Joe Biden's administration. This is happening weeks before export bans on the high-end chip-making equipment come into effect. This is according to people familiar with the matter.
Yeah, it's going to be another fascinating year. We're guessing it's going to be when it comes to global semiconductors. And for this, we go to a voice that we rely on to make sense of it all. Bloomberg News U.S. semiconductor and networking reporter on Zoom in our San Francisco bureau, Ian King, joins us. Ian, good to have you with us this afternoon. Can you explain what exactly is going on with ASML, the U.S. government, and then what was set to happen in a few weeks when it comes to export bans? Tie it all together for us.
Yeah, it's analogous, Tim. Think about this. If I say, okay, from next month, you're not allowed to buy chocolate ever again, and I'm going to stop you going anywhere near the chocolate store, what are you going to go and do, right? You're going to run out and buy as much as you possibly can.
Got it.
And this is what has happened, as you know, going back to October last year and October the year before then. The US put restrictions on shipments of certain types of equipment to China, trying to limit their ability to make advances in the chip industry. For those to be effective, of course, they had to get the Dutch involved, they had to get the Japanese involved, and that took some negotiation, that took some time. So there was a lag between the agreement to put these restrictions in place and when they were taking effect. So our understanding is, the Chinese did what logically they would do and acted in their own interest and ordered as much as they possibly could in the interim. The US is obviously cognizant of that and the potential damages of that, and our understanding is that they have reached out and said, look, act in the spirit of what we've asked you here. At least don't ship certain things to certain companies, and that's what this has resulted in.
Who's the U.S. to be able to do this? I asked this kind a little, not kind of naively, but I'm just kind of like, it's a publicly held company. If I was an investor or shareholder of ASML, I might be like, hey, wait a minute, you're supposed to sell as much as you can.
Yeah, I mean, that's the tension. That's the tension that the U.S. companies and overseas companies like ASML and others have. The U.S., of course, has the right to do this legally because of something called the Foreign Direct Product Rule, where you have one screw in one of these machines that was made in the USA or designed in the USA or something like that, and you can say, nope, you can't do it, right? So, but obviously that's using a sledgehammer to knock in a tiny nail, and they don't want to do that. They don't want to set a precedent. They don't want to be heavy-handed. They want some kind of consensus agreement that this is a bad thing and let's all get together. So there's been this to and fro, and we're not 100% sure on the exact mechanism, other than there were direct appeals made, as you see in our story, by senior administration folks reaching out to their counterparts in the Netherlands and saying, please, clamp down on this a little bit harder.
Yeah.
Hey, Ian, what exactly is the U.S. concerned with what China could do with these manufacturing equipment from ASML?
Yeah, I mean, I think the best example of that is what happened when the Secretary of Commerce, Gina Raimondo, visited China, trying to sort of calm things down and make the relationship a little bit smoother. What happened was Huawei quietly announced a phone. Inside that phone was a chip that was designed and built in China, way more advanced than the US was hoping. And that chip was made with US equipment. And so there was kind of a bit of a signaling going on, a bit of a battle going on there. And so what the US is trying to do here is to make sure that we don't get embarrassed any further, that the restrictions are actually having their effect. So some of these machines maybe we're going to go to some companies that the US really, really doesn't want to have this capability going forward. So that's really what's going on here.
Again, I'm going to go to I'm playing devil's advocate a little bit here, Ian, but who is the United States to tell China, listen, you can't build up your semiconductor industry.
We're America, Carol?
Right. Oh, wait, but we can. Again, I'm playing devil's advocate. I'm being a little naive, and I know there's concerns about privacy and military and the government being involved, certainly in Chinese companies. But help me out here.
Couple of things at play, right? The first and foremost is the US is citing national security. It's saying certain companies in China, Huawei is obviously a prominent one, SMIC, the manufacturer there, another one, they have close ties to the Chinese military. They are taking our technology and they are empowering the People's Liberation Army, and that is a threat to our security. So that's the first justification. We don't know the exact details of how these things were supposed to have worked, and they've never really given us exact breakdown of how that worked. But that's the central pillar of these things. But then the other side of it is the world's two largest economies. Semiconductors are increasingly important in everything. I mean, obviously, I'm saying this, but it really is true. All of these modern facets of the economy, whether it's AI, whether it's electric vehicles, these things where there's an industrial and technological rivalry between China and the US, a lot of that is founded upon semiconductors. The US controls semiconductor technology still and wants to keep that prominence and preeminence in the world.
So where does China go without ASML equipment?
This has been the argument all along that the industry has made, which is, look, if you cut them off, what are they going to do? They're going to go out and they're going to build their own as fast as they possibly can. The US argument is, look, we want to keep them 4, 5, whatever, however many generations of technology behind, and they'll never catch us up. The industry is like, are you really sure? They've got a lot of money to throw around. The consensus, I think, of experts is it will take them a number of years, but eventually perhaps they can catch up. Other countries have been hampered in the past in their ability to do this because they don't have the internal market. China does.
Well, definitely worried investors in today's trade. We definitely saw it play out. Shares of the ADRs of ASML holding down 5.3% just off their lows of the session, but down more than 5% in today's trade. And if you look at the Philadelphia Stock Exchange Semiconductor Index, it was down about 3.6% today.
Our big thanks to Ian King, Bloomberg News U.S. semiconductor and networking reporter, joining us from San Francisco. Carol, some breaking news. President Trump appeals Maine decision barring him from ballot over January 6th attack. An appeal of Colorado ballot ban expected.
Your company news headlines on Bloomberg Radio.
From Bloomberg World headquarters, I'm Charlie Pellet. Citigroup shares up today by 3.1%. Mike Mayo is doubling down on his bullish call for Citigroup. The Wells Fargo analyst has already named Citi his top pick among big bank stocks for 2024, replacing JP Morgan Chase as his favorite. But he took it even further by saying he expects shares to more than double over the next 3 years as the bank undergoes a metamorphosis. Citigroup, by the way, reports at the end of next week along with JP Morgan Chase. JP Morgan Chase shares advanced today up by 1.2%. JP Morgan, by the way, now at a record. Airbus managed to beat its annual delivery target in 2023 as the playmaker ramped up output in December. And with more, here's Bloomberg's Denise Pellegrini.
Charlie, the world's largest maker of commercial aircraft likely handed over 733 planes to customers last year. That's according to preliminary data from Aviation Flights Group. Of those, the group says 579 were for Airbus' best-selling A320neo family of single-aisle jets. And the group also says wide-body A350 aircraft accounted for 57 units. Airbus and rival Boeing, well, they're both trying to strike a balance between customers buying planes in record numbers and suppliers on the backside still struggling to keep up with the faster pace of production. Charlie?
And that's Denise Pellegrini reporting ADRs of Airbus today down 0.2%. Boeing shares down 3.4%. And those are some of our top company stories at this hour. I'm Charlie Pellet, and this is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenovec on Bloomberg Radio.
It is Bloomberg Business Week. Carol Master and Tim Stenovec live in the Bloomberg Interactive Brokers studio. Let's now get a check on the latest world and national news. We got Dan Schwartzman from the Bloomberg 1130 newsroom in New York. Hey, Dan.
Thanks, Tim and Carol. As you've been hearing on Bloomberg Radio, former President Trump has now appealed a ruling by Maine's Democratic Secretary of State barring him from appearing on the ballot due to his alleged role in the January 6th attack of the U.S. Capitol. The appeal will now go to the state Superior Court. Harvard University President Claudine Gay has announced she is resigning, which now ends the shortest presidential tenure in the school's history. Gay served just 6 months and 2 days and had come under increasing scrutiny after her disastrous December 5th congressional testimony on anti-Semitism on Harvard's campus, as well as multiple allegations of plagiarism in her academic work. Harvard says Provost and Chief Academic Officer Alan Garber is going to be named interim president. 6 people have been killed in Beirut, Lebanon, in a suspected Israeli drone strike. The state-run Lebanese national news agency says an office belonging to Hamas was hit. The attack is the first on the Lebanese capital in nearly 2 decades. According to the terror organization, the deputy head of their Politburo, Saleh al-Aruri, was killed. Al-Aruri also is known as the mastermind behind the Palestinian terror group's armed wing in the West Bank and is now the most senior Hamas member to be eliminated since the October 7th attack on Israel. Maersk says it's going to once again stop letting its container ships sail through the Red Sea as more vessels have come under attack from Iranian-backed Houthi militants. The attacks have continued despite the presence of an international coalition of naval ships led by the U.S., which are meant to protect the transiting ships. Meanwhile, tensions in the region have risen, Iran dispatching a warship to the Red Sea, which obviously is not going to go well with the coalition ships as well. Around 12% of all global trade traverses through the Red Sea as it leads the Suez Canal and the Mediterranean. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Dan Schwartzman, and this is Bloomberg. Back to Tim and Carol.
All right. Thank you so much, Dan. Really appreciate it. We want to go back to what is the most read story on the Bloomberg in the past 60 minutes. Dan talking about it, and this is Claudine Gay stepping down as president of Harvard University, so ending that brief and tumultuous tenure marred by allegations of plagiarism, but really safe to say it was a campus embroiled and controversy over anti-Semitism